I want to do a quick audio check. Can everyone hear me loud and clear? Luthi, Chip. Good. Everyone can hear me loud and clear? Fabulous. All right, guys, welcome to Closing Bell. My name is Fausto Pugliese from Cybertrain University. This is an event we do once a week, and we always feature one of our great channel partners. Today's great channel partner, which we have, is eSignal, and I'm almost positive you guys know the name. It's a brand name. We had him here, a few times, and they did such a great job last time that we wanted to have them come back sooner than later. And the thing is that, when it comes to good direct access trading platforms, it's all about having the right tools. And, one thing I love about using the eSignal platform is, and most importantly, it's one of the very, very few platforms that I could remember that is one of the pioneers of trading. And that's one of the great things about having a good platform. There's a lot of brokerage firms out there that, how can I say it? They all have free platforms. They have their own trading platforms, but sometimes it takes a third-party platform to get all those great tools that you need, And just remember, I know there's some free platforms out there, and there's ones that cost money, and some of them are worth the money, and some of them that are free are not even worth looking, because the only thing I always say in my courses, the only thing that's free is the cheese in a mousetrap. So once again, you pay what you get for. Now, today's featured guest, we have WD Gann, and obviously he's one of our great channel partners at the eSignal platform from Interactive Data, and he's going to be doing a presentation specifically talking about day trading and talking about the great features on how to use and a couple of strategies he's going to teach you. So he's going to close out the meeting. Yes, this is being recorded, everyone, so you will be able to go back and review it, and it will be posted on our YouTube channel on YouTube within the next 24 hours. So you'll be happy to go review it and so on. So Dwayne's going to close out the meeting. He's going to go off for about an hour. In the meantime, once again, thanks everybody for coming for Closing Bell, and always join us every week, same time, 4:30 Eastern Standard Time every Tuesday. So Dwayne, without taking too much time away from you, the stage is all yours.
I do appreciate it. Hello and welcome everybody. My name is WD Gann. I am one of the senior trading instructors for eSignal and eSignal Learning. I am specifically tied to the advanced GET product. That is sort of the confines of my world. And what we're going to be doing today is introducing a topic that many of you, I'm sure, have come across and have quite a few questions about. We are going to be delving into some of the intricacies of Gann theory. Now, as we go through our time together today, we're going to be talking about a variety of things. The first thing, we're going to talk about Gann's method. We're going to talk about some of the pieces that he held near and dear to his trading to make him one of the best technicians of all time. We're talking about somebody who had an incredible amount of accuracy associated with their trading, and hopefully through our time together today, you will really begin to get a sense of what groundbreaking work he did in his professional career. Specifically, what we're going to be focusing on today is the square of 9. We're going to be delving into that particular aspect of it. There's so many components to it that we just don't have enough time to cover each and every piece. We're going to be talking about specifically one of the tools that I use day in, day out, without fail, the square of 9. And then finally, we'll do a little bit of Q&A at the very end. I'm sure there's going to be some questions, and I do want to allow some time for that. Now, a little bit about the man himself. William Delbert Gann passed away in 1955. Born in Lufkin, Texas, son of a farmer, fairly humble beginnings, and again, one of the greatest traders of all time, one of the greatest technical traders of all time, which is why I have sort of this attraction to his work, is everything that he did was very, very rooted in technical analysis. And he came from a very devout family, a very religious family. They were Baptist. And during his career, he was rumored, and this is speculation, to have made around $50 million. And when we're talking about 1920s money, in today's dollars, that is a significant chunk of change. It's nothing to sneeze at in terms of, 50 million is 50 million, but in today's inflated dollars, it's a completely different type of numbers. So it's just more of a history lesson about where he came from. Now, there's a variety of pieces, as I've said, to Gann's trading. One of the things that he did that was so groundbreaking, and one of the things that made him incredibly accurate, was the fact that he took markets and he broke them up. He broke them up into very usable pieces to give himself a sense of what type of behavior to expect from the market. He liked to divide the markets into halves, into thirds, quarters, and even eighths. So he would take a particular trading range, a swing in the market, and begin to break it up by these particular fractions to give himself a sense of where the market was and how we expected the market to behave at a particular point in time. One of the major parts of Gann theory has to do with what we call time and price convergence. Time and price convergence is one of those terms that you hear a lot in trading, and not too many people really understand what it involves. Time and price convergence is basically the idea that whatever can be done in terms of analyzing price can also be done in terms of timing the market. And it's when you get these two components coming together, that's where you get a real significant point, a focal point about where we can start looking for trades. When we get the right time and the right price, we expect something to happen. Now, as far as some of the major numbers, and we're going to be doing a lot of this in terms of Gann theory, he focused on a very specific subset. This is by no means a complete list, but some of the numbers that he really focused on time and again, and a lot of his approach was really focused on astrology and religion. That's where he really was most comfortable, and what he used to really identify those key points in the market. Now, we're not going to get into that. I'm just going to leave that for a completely different presentation. But it really speaks to the fact of what he used to make his decisions. Now, because of that astrology and religion, I'm sure everybody has heard the term of financial astrology, and a lot of it people just discount as this is not really something I can use. How do I trade with this? A lot of those questions are very honest questions to ask. Because of his approach, it made his original work very, very cryptic. If you go out and try to identify or to read any of the original works, I'm talking the original books that Gann put out, very difficult to read. And because of that, a lot of his work was really just discounted. People said, this guy's fallen off the truck somewhere along the road, and this is just not something that we're going to approach. We're not going to look at trading in this particular way. And that being said, when you go out and you look at a lot of the original works of WD Gann, they're also very, very expensive. When we talk about things like the Gann wheel, when we talk about some of his original books, some of his original books can be, $400 to $500 for a used copy. Gann wheels can run into the thousands. But really, what we're doing here is using this to identify, again, those key points in the market. Again, we're going to discount most of it, or not necessarily discount it, but we're going to table most of it, and we're going to focus on the square of 9. Now, when we talk about the square of 9, the first question that people come up with is, why the square of 9? What is so important about the number 9? Well, the reason that he did this was because it was the first odd square that was greater than itself. So if we look at all the odd numbers in a string of numbers, if you take 1 by 1, 1 times 1, you end up with 1. Okay, well, 3 times 3 equals 9, and that, again, is the first odd square greater than itself. Now, as we go through this, understand that everything that we're doing is simply to identify support and resistance levels. That's it. Don't make it any more complicated than that. All we're doing here is looking for very critical points of support and resistance to really act as the backstop for whatever trading strategy you have decided to employ, whether that's a candlestick pattern, a stochastic divergence, whatever the case may be. This is just about support and resistance. Now, it can also be used for timing. As I said, whatever we can do in price, we can do in time. And what we're going to do here is try to combine some of these things to really give you those key areas of the market to focus on. When we're talking about the square of 9, it's important to understand that we are going to be working off of major turning points in the market. And I'm talking about daily, weekly, and monthly charts. That is primarily where we are going to be originally focusing our attention so that we can generate the levels that we need intraday. Remember, we're day trading here. Our goal is not to be in a position for the next 6 months. Our goal here is to get in, get out, and move on to our next trade. One of the best analogies for the square of 9 comes from what we call the law of vibration. Now, the law of vibration, the best way to think about it is, rocks in the pond. Okay, if we're standing in front of a body of water and we take a rock and we throw that rock into the water, the size of the rock is proportional to the size of the ripples that we get from that hit. So if we take a little tiny rock and throw it into the water, we get very tiny ripples. If we take a very significant rock, and a big rock, and throw it into the water, we get very large ripples. That's why we're going to be using those higher time frames, daily, weekly, and monthly turning points for the law of vibration, because these pivot points, that's essentially our rock. And this will begin to really, as you begin to see it, understand how it all works. Now, with that in mind, here we go. Time to venture into the deep end of the pool. All right, for many of you, this is the first time you've ever seen a Gann wheel. This is a chart. Believe it or not, this is a chart. Very unconventional, very different than most traditional charts that we work with today, but a chart nonetheless. The best way to think about this, and I'm sure many of you have been to Las Vegas at some point in time, if you think about the Luxor Hotel, what we're essentially looking at here is a top-down version of that hotel, all right? It's a four-sided pyramid, and that is what makes up one of the parts of our Gann wheel. We've got, a couple of different things. We have price. We also have the degrees of the circle. We all know the circle has 360 degrees. And then we have the angles. The angles of the Gann wheel are the lines here, the vertical lines that you see here going through the middle vertically, going through the middle horizontally, and then these other angles out here to help identify, those support and resistance levels, all right? Now, let me change my cursor here real quick just so I can illustrate some of this, all right? We've got three different pieces that we're working with: price, the degrees, and the angles, all right? Now let's tackle the first one. We're going to be talking about price. Now here we are looking at the very center of the Gann wheel. We are starting in the very middle, highest point of the Gann wheel. And what the Gann wheel does is it moves in a clockwise fashion. We basically start with the number 1, we move to the left, we get number 2, we move up, 3, 4, and every time we go around, we are completing a rotation, all right? And essentially what this does is it develops a spiral around that Luxor Hotel. So we're starting at the very peak and we're rotating all the way around. Now the other part of this are the degrees. Again, 360 degrees in a circle, and these degrees are going to combine with the angles to give us the focal points of the Gann wheel about where we need to spend our time. Now, When we put the angles to it, you can see here that Gann focused on a variety of these. There were several of them that he found very, very critical. Obviously, the ones that go through in a horizontal fashion, the ones that go in a vertical fashion through the middle of the Gann wheel. These are some of the most important. We have 0 degrees, 90 degrees, 180 degrees, 270, and 360 completes the circle. And we also have what are called the corner angles, the green lines that you see here, because these are the angles that touch the corners of our Gann wheel here. These little spots right here are very important to this. Now that you have at least a basic understanding of how a Gann wheel is put together, what do you do with it? That's the million-dollar question, all right? What we're going to do here is we're going to substitute the number 1, that starting point, with a significant high or low in the market. In this case here, we're looking at a daily chart of the S&P futures, S&P E-mini futures. And in this case, you can see that on July 6th, 2010, we made a low price of 102 3/4. All right, this thing trades in quarter point increments. And you can see here, that is our lowest point. So instead of the number 1 being the starting point, we're going to make the starting point this number, 1002.75. And as that Gann wheel, as we move in that clockwise fashion, in that spiral around the top of the Gann wheel, we're going to get some numbers to focus on. Now, as we do this, here's how it looks. In this Gann wheel, you can see my center point is that exact pivot low point, 102.75. And as we take the angles of the Gann wheel and put them on, what we're looking for here are these numbers. The numbers that fall on the angles, all right, as we go around. These numbers are support and resistance levels. Okay, now I can almost see everybody's eyes rolling back going, wait a minute, really, this is the stuff that you trade on? Believe it or not, yes, this is the actual work. And what we're going to do is take these numbers that fall along these angles and put them on the chart. And as we get them on the chart, you will see exactly how those numbers really prompt the price action to move in a significant way. Now, as we keep going forward here we are looking at that same chart. We have our July 6th, 2010 low point. We also can come up here and use this for high points. We use the February 11, 2011 high on the S&P. We substitute that high point in the middle of the Gann wheel, and the numbers that fall on those angles become our support and resistance lines. Whenever we're using low points like this, it's generating resistance levels upward, okay? Whenever we're using high points like this, it generates support levels downwards. So the lows build resistance, the highs build support, okay? Now, as we go through and apply those numbers and pull them from the Gann wheel, this is what we get, okay? The numbers that you see here on the chart are the numbers that fall along the angles. And what I want you to take note of here is how the market responds, all right, to that particular point in time, because these levels essentially are days, weeks, and months old. And as the market comes into these areas, you can see exactly how the price action respects it. As we hit these areas again and again, all right, you know all of these levels well in advance. There's no surprises here. It's all about putting a trading strategy to these levels, again, whether it's a candlestick, some type of divergence, whether you're looking for a moving average to be violated, something along those lines is really there to give you the real thesis about what we expect the market to do. The square of 9 levels are simply there to provide that point of support, that piece of resistance that we begin to work from. And it happens again and again and again. So in this case, all right, we've got a fair amount of hits here, these support resistance lines that we can work off of. Now, When you put this on a daily chart or even a weekly chart, this is what you get. This we cannot do anything with. You can see here that the lines are very close together. That's almost nonsensical. There is absolutely nothing that I can do from this daily chart, but it begs the question, this is where we need to start looking to change our perspective about the market, and that involves dropping down to a lower time frame. So all of these lines that you see here on the weekly chart become very, very important when we go to that intraday, that day trading mentality, that very short-term perspective. Now, with that in mind, here is how those lines look on the 30-minute time frame. And you can see exactly how close we are hitting to these levels, to these areas of support and resistance time and again. And again, these things have been here for weeks and months, long before the price action ever got there. But now as we are trading within that particular range, these numbers become relevant. And the degree of accuracy in which they're hitting is very, very important. Now, in this case, you can see here that the purple lines were generated by the October 8th, 2007 low, 1586.75. We pop that number into the Gann wheel. We work our way out clockwise, building that spiral, take the numbers off the angles, put them on the chart. That's exactly what's going on here. And we're doing the same thing off of the high point. The levels generated from the March 2nd, 2009 low, that's right here. You can see those gray lines. And obviously, March 2nd, 2009, we all know that S&P made a low point in that particular area, and you can see how the market is respecting them time and again, okay? So in this case, we've got, I think it's close to about 11, quite a few good tests in here that really can make a trading strategy much more robust. Now, as we continue on here, we are looking at another one. This is crude oil. You know, depending on how adventurous I'm feeling, I trade crude oil on a fairly regular basis. And what I've done is I have gone all the way back and chosen the high point off of this weekly chart of 147.27. Put that number into the Gann wheel. We go around clockwise. We take the numbers off the angles. We put them on the chart. We're also doing the same thing for the lows that were made in crude oil, 33.20 a barrel. We're taking that, putting it in the Gann wheel, and using the numbers that come out of that calculation as points of resistance. So just remember that our high point, those are going to be our purple lines. The gray one, those are going to be off of the lows. Now, when we go to a short-term time frame, here is what we get. You can see these areas where the market is respecting these levels very, very, almost to the tick in many cases. And this is what we're looking for. As the market comes into these areas, this is where I'm looking for some type of candlestick pattern, whether you're following a doji, a hanging man, you're using some element here to really look for a way in. These levels serve as a great backstop to get you into the trades, and to do so, most importantly, with a minimal amount of risk. That is our job as traders. Our job as traders is not to be right. That is not our priority. Our job is to minimize risk. Being right helps. I'm not discounting that, but risk management is really the name of the game, and that's what we're going to be focusing on by using these levels. By knowing that there's a major point of support down here, this is where I'm really going to start looking for any kind of buy signal to start working with. Now, from here, this is one of my day trading instruments. I day trade the Japanese yen futures quite frequently. This is one that I spend a lot of time on. And what I'm going to do here is we're going to use the high point, all right? Back here happened about mid-June of this year, and 106.63, that's a really nice high point to work off of. And we've got the lines that are coming from that. I've tried to do this intelligently. You can see here that I've got a green arrow, so any levels coming from this particular point are going to be highlighted in green. From here, this is how those angles when you put them on the chart, how the market is reacting to them. You can see multiple hits all along the way that really give us key areas to focus on in terms of our trading strategy. So whether you're using Elliott waves or you're using, again, some type of trading strategy, whether that be a divergence or some indication of a disjointed piece of the market, these levels are here to really prompt you to say, hey, this is a logical point at which we expect to find support or resistance. So that's just one set of levels. That's one piece of this. But remember, we can do this for multiple highs and low points. We can do this for a variety of things. And as we begin to really build it out, it really completes the picture. Because you can see some areas in here. There's some spots where there's some slack, and it doesn't look like there's anything relevant or tradable that we can work with. That's an indication that we maybe want to bring in a second or third set of levels. Here we are working with that same chart of the Japanese yen. Taking a low here. This is a major low point, 98.52. All right, and this time you can see that I've colored the arrow in purple, so any purple lines are going to be coming from this particular point. As we do that, here's what we get. We've got multiple hits at the high, same chart, and you can see these areas where we're hitting very, very well, and that's the kind of thing that we want to employ. We'll do one more. Here we are with a high point of 104.40, and from this point, I've got the blue arrow here telling us that any levels that we pull from this particular pivot point, we're going to color those in blue, and this is what we've got. So we can see these multiple points where the price action hits that level and gives us a very clear response. Now, the fun part of this is when you start to bring all of this together. We've got one more here. I'm going to take the low, 99.39. We're going to come in. We're going to generate some levels off of that. And again, you can see how we've been hitting with that particular calculation. Again, this really becomes helpful when you put it all together. And the question really comes from, if you draw enough lines, the market is bound to hit one of them. That's a very common thesis for people who don't understand Gann. If you draw enough lines on your chart, yeah, you'll find support and resistance anyway. That's not what this is about. This is about using a very, very clear calculation to find those points. And again, this is what we get when we put all of those things together. We've got all 4 or 5 of those pivots working in concert to show us where the major points are. You can see we've got a variety of square of 9 levels clustered in right here. That's a big point of resistance, and the market responded to that. What happened? Where did we go? Well, from here, hit another square of 9 level, 102.22. And it just happens again and again, and it really gives you a very clear sense of where the market is likely to find a sticking point, or an area where you can actually begin putting on trades and looking for a clear way to take advantage of this. Now, as we keep going forward here, this is another one, all right? When we drop down to that 5-minute chart, all right, same instrument, same set of levels, now we're going intraday. Now we're going to the short term. Look at what we've got. Hit, 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 and in a variety of places, you knew those levels well in advance. Run into a square of 9 level, and you can see we just found support multiple occasions right across here before we just could not get beyond that level of resistance. Market moved down, and we found support once again. So again, at the end of the day, support and resistance. That's all this is for. Nothing any more complicated than that. But when you know these levels in advance, when you know where those levels are located, that's the most important part of this. Now, as we said, whatever we can do in terms of price, we can also do in terms of time. Just another look here at the Japanese yen. We've got that 10-minute chart, just a slightly different perspective. And by knowing where these things are ahead of time, what it does is it tells you when it's time to play. You know, areas where maybe, okay, I'm in between some levels here. I'm not sure which way it's going to go. I'm going to sit back, wait for some of these square of 9 levels to come in, and then I'm going to start looking for a trading strategy. I'm going to start looking for a thesis about why the market should move one way or the other, but that square of 9 level is there to provide the catalyst. I tell a lot of my students that the formula for trading is simple. Have a strategy, have a level, have a trigger. The strategy is there to give you a sense of direction. It's there to tell you what way you expect the market to go. The levels are simply there to reinforce that strategy, and the trigger is the independent event to actually commit you to the trade. Many traders use indicators as trigger techniques, and in my opinion, that's not really the correct function of an indicator. Indicators are lagging by nature. The only two true leading indicators are price and volume. That's it. So what we're going to do is use an independent trigger, whether it's a trend line, a simple trend line, a break of a trend line is enough to push the market, all right, and tell you, hey, it's time to get in. We're seeing a change in the bias. We need to react to that. The levels are there to let you know where those points are coming in. Now, from here, as I said, whatever we can do in price, we can do in time. What I've done in this case is taking our Gann wheel, and instead of putting in a particular high point or a low point as our starting point, I've put in a date. I've put in basically when that high point or that low point was made, and all we're doing here is the exact same thing that we did in price. We're simply coming over to the left. We have our date here, and it's moving one day at a time. All right, so we started on the 6th, we move to the 7th, we come to the 8th, and as we make these rotations, we're taking the dates off of the Gann wheel, 7:14, 7:30, 8:23. We're taking these dates, putting them on our chart, and looking for areas where we expect price and time to come together and to give us that disjointed area that allows us to step into a trade, again, primarily the main focus with minimal risk, all right? So this is what we're doing here in terms of the Gann wheel. It's a calculator. At the end of the day, as you go through and kind of begin to absorb all of the pieces that it functions, at the end of the day, it's a calculator. It's really just there to give you a sense of where those major support and resistance levels are and where those particular timing marks are located. Again, all coming off of the Gann wheel. Now, with that in mind, I've always found that the best formula, the best way for really helping people understand the power of this stuff is to go to real time, is to actually go into the charts. And I'll show you today exactly how those levels came together. So what I'm going to do is I'm going to go share my monitor here. Let me go grab my, my desktop here. And this is going to be my number 3 monitor. There we go. And with that in mind, I'm assuming that everybody can see what I've got going here. This is a chart here, a daily chart of the S&P E-mini futures. All right. Now, as you can see, you know, the levels are pretty tight. There's not much we can pull from this. And they come from a variety of points. These highs and lows that you see on the chart, and I'll just use my arrow to kind of illustrate that. These points in here are the points that we're using to generate those support and resistance levels, okay? Now, again, it doesn't mean a whole lot until we start dropping down to some of the lower time frames. So is this primarily a day trading tool? You can absolutely use it for day trading. Does it also work for swing trading? Absolutely. It all comes down to your perspective. How long do you want to be in a trade? Do you want to be in a trade 2 minutes, or do you want to be in a trade for 2 days? Regardless, the levels are just there to give you some perspective. So let's drop down a little bit and begin taking a look at some of the lower time frames. Let's go to the 15-minute chart here on the S&P futures. And there you go. This is how the S&P futures have behaved against those square of 9 levels that you saw on the daily chart. Here is how they have behaved, throughout the course of the last couple of days. Now, as we do this, take a look here. Reaction, all right, where did we go? Came down, hit our square of 9 level, some consolidation, really nothing we can say about that other than the market was moving from in a sideways sort of fashion. But where did we go? We came down to that square of 9 level. Where did we go? Ran right up, missed it by a couple of ticks, just by a couple of ticks. The actual level was 1798 3/4, and our high point was, if you look at the data window on the left-hand side of my chart, the high was 1798 1/2. So I'm sorry we missed it by a tick. But really it points to the idea that these levels are very, very tradable. You just have to kind of break out of that conventional thinking about what's possible in different ways to look at the market. Where did we go? Found a support level here, square of 9 level. Ran right up into the 1793 1/4 level, another point. And where we hit down here towards the early part of today, around 11:15 Pacific time, square of 9 level. And where did we finish the day? Where was the closing bar ending up? Well, take a look at the high, 1794 1/4. Did we have a square of 9 level there? We most certainly did. Let's go down to the 3-minute time frame. Let's go to something very short term. And that's how our intraday behavior came in. Now, take a look at something here. Just sort of the idea of putting a trading strategy behind this. Does everybody see this? Does everybody see that right there? This is the indicator that I'm using is the advanced get oscillator. This is this has some similarities to a MACD, but this is what we call a divergence. Basically a disjointed area of the market where the indicator that we're using, in this case the advanced get oscillator, and the price action are doing two very different things. We've got lower lows being made, but during that same period of time, the oscillator is not confirming those lows. All right, so that's a warning sign from the market that this thing is trying to make a major turning point. The most important part of this is, where is that happening? It's coming into that square of 9 level. All right, and again, where did we hit going into the close? Right there, 1257 regular equity close. We printed right here 1794 1/4. What did we have? Square 9 level. Okay, but the market respected that. Let's take a look at another one here. Let's go to the my favorite. This is the Japanese yen. This is the 6J. This is the continuation symbol. So this is the pound F. And let's go to the daily. And you can see again, daily. This is not going to help me, not by a long shot. But I've taken those highs and lows, the same ones that you saw in the slides that were done several weeks back. All right, take a look at how the price action behaved intraday, just in today's price activity. Let's go down to that 3-minute chart. Here's what we've got happening intraday. Look, where do we hit? Square of 9 level. Once we get past the square of 9 level, it's what we call the polarity principle. It's actually a theory in market behavior. All right, it's a fancy way of technicians saying when resistance is broken, it becomes support, and when support is broken, it becomes resistance. Believe it or not, there's a term for that. And so you can impress your friends at parties saying, talk about the polarity principle. It's really a very simple thing. But look at how the price action behaved. If you're doing nothing more than using these points and combining them, maybe you're a fan of using Fibonacci ratios, which I include myself in that group. If you're coming in here and saying, well, I have a square of 9 level, but I also have a nice Fibonacci retracement, that's serving as the backstop for, this little trend continuation trade that we've got going here. Another one here. Where did we find resistance? Another square of 9 level. And it happens, this is how we finish the day, right on that point right there. okay? Now, the reason that I use the square of 9, I've done it manually for many, many years. I will tell you it's a very laborious type of thing. It takes some time to get the numbers into the Gann wheels, get the numbers off the angles, get them on your chart. It does take some time. One of the things that the eSignal 11 platform has allowed me to do, and to do so in a very efficient way, is with this piece right here. This little button right just to the left of our price magnet, you can see here, import horizontal lines. This function has the ability to read Excel files. So if you have Microsoft Excel, all you have to do is to put those numbers into a file, and you can see if I scroll down here, these are all the different square of 9 levels that I have for all of the different markets that I follow, from the euro all the way down to individual stocks, you know, and it really does allow me to import lines very, very quickly. And it's just a nice creature comfort to have. So I wanted to just show you exactly we can do it for the spiders, currencies, future stocks. It doesn't matter. Price is price. And if you're able to identify that major point, put it into the Gann wheel, and put those lines on your chart, it really can open up a new dimension in your trading. So let me go back here to my monitor here, to my presentation rather, and we will sort of begin to tie it all together. Now, how do you get these levels? How do you get these points? Well, there are a variety of free Gann wheels out there. You can search for them, and you can, you know, use them interactively. It's a very, you know, efficient way to do it. There's also some subscription services out there that do this. I use squareof9.com to generate my levels, put them into that little file that you saw for the importing feature with eSignal, put the numbers in there, import the lines, and I'm done. Now, with that in mind, before I go too far along and start to talk a little bit about what eSignal has put together for the attendees here, I just want to open up the floor to some questions, because I'm sure you guys, as I've said, probably have quite a few. First one here from Gary, is this a tool in advance get? The line import feature, that comes standard with eSignal. If you can find a place to get those Gann lines into that Excel file, you will be able to pull those in very quickly and make things a lot easier on yourself. So Abby, again, it's that line import feature. You can download that from the eSignal forums. They've got a little template there that you can go and download the template and then simply replace your numbers, the Gann wheel numbers, the square of 9 numbers in that file, and import them right into the charts. It does not work with NinjaTrader. It doesn't have that specific aspect to it. However, if you have a Gann wheel, it doesn't matter what platform you use. As long as you've got the level, you can draw a horizontal line on that chart and be good to go. So, Richard, I don't know if I have a timing one on this particular page file. So if you want to hit me up later, the guys at Cyber Trading University will be happy to pass on my information. And if you're interested in seeing that, I will dig through what I've got here and be more than happy to pass one on to you. And that goes for everybody. But again, that's what this is all about, finding support and resistance levels in a very unconventional but a very, very tradable way. It's really about opening yourself up to a new way of thinking and understanding about not necessarily why these numbers work. I can't tell you that because I don't have a good answer. I just know that they do work, and they give me a lot of good information to trade from. So Darren, is the Gann box not usable in this situation? No, Gann box is very appropriate in concert with these square of 9 levels. I use both. I use Gann boxes, fib circles. I'm not shy about getting a little off the reservation in terms of in terms of how I'm analyzing the market. But this makes up a significant part of what I am doing intraday. Gary, does eSignal have any videos that explains this? Not that I'm aware of, but if again, this is going to be recorded and put up on the Cyber Trading YouTube channel. So if you would like to go and review this, or if you would like to approach me later, send me an email. I have some resources that I can send your way if you would like to learn more about this particular market theory. Again, there's a lot of pieces to this, but I wanted to focus one today, the one that most people are open to, which is being able to identify good tradable support and resistance levels, because that's one that most people can get their heads around. And again, if you were to take all of my tools away tomorrow, this is one that absolutely I could do on any chart in a very, very simple and straightforward way. So let's see here. Rob, do you do any position trading? Absolutely. Absolutely. And I do use these levels even when I am position trading. So it's very doable. It really comes down to how long you want to be in the trade. I tell people, if you're not comfortable making a decision every minute, stay off of a 1-minute chart. If you're not comfortable making a decision every 3 minutes, stay off a 3-minute chart. And with that in mind, you use these levels even in a swing trading environment. Maybe that gives you some information that, okay, I see a level coming in, but we're a couple of days away from it. I'm going to wait for that level to become more relevant, and then I can step into it with, again, a lowered degree of risk. Let's see here. Tom, can you use the square of 9 methodology on lower time frames, such as the hour of the day? I've seen some people do it. It's not one that I subscribe to. I use it more for larger, more positional types of things. So I'm not looking for, you know, are we going to make a turn this minute or in the next 5 minutes? I'm using it for the broad, big picture, trying to find those big disjointed terms for more of my swing trades. The bars themselves, the candles, that's what gives me my information as it reacts to those levels. So I haven't found much validity in it, but there's some people out there that swear by it. So Ian, there's a lot of websites out there. If you're interested in learning more about Gann theory, all you have to do is type WD Gann. There's some great resources out there. You have to be patient in terms of sifting through the amount of information. Again, I use that squareof9.com price calculator that I mentioned. That's the one that I use, and it uses a lot of the same type of thing, but in a more usable, more, how do I want to say it, a more efficient way. That's the best way to think about it. Troy, sorry for the silly question. So what I'm understanding is we have to import the Gann levels in from another source. Must you also subscribe to Advanced Get to use the import feature? No, you can. This actually comes with your standard eSignal. All right, you can use this with your standard eSignal. We also have some EFS studies, some free EFS studies that are out there. And you can download those EFS, eSignal Formula Script studies, put them on your charts, and it will also do the levels for you as well. Somebody had asked for the website, the one that, there you go. That's the one that I work with and the one that I use to generate these levels. But with that in mind, I'll talk a little bit about what eSignal is putting together in terms of this. We are offering a 30-day risk-free trial of the program. You do a 30-day risk-free trial, and if you do that, then the second month is free. And this line import feature that I've talked about, again, very standard with the overall program. It's not something specific to the Advanced Get iteration of eSignal. If you have more questions about this particular offer or ways to get started with eSignal, you can contact our sales group at 1-800-815-8256, or you can email products@interactivedata.com. One of the sales reps will get a hold of you, and they will be able to talk you through some of the specifics and really custom tailor this for your specific needs. So I wanted to put that out there so everybody has the chance to make that decision and have the avenue to talk to somebody further if you're interested in learning more about what eSignal has to offer. I think I've gotten through the questions here. Let me just make sure I haven't missed anybody here. Looks like we've got it. So with that said, I'm going to turn things back over to Fausto. Again, I would really like to thank Cyber Trading University and Fausto specifically for having me for this event. It's always great to work with partners of this caliber, and for us to have this relationship really translates to just a better value for our users and for the users of Cyber Trading University. It really is just a good relationship, and one that we see as a one that we want to help do more of these events and give you guys the best bang for your buck. So with that said, everybody, thank you so much, and I'll turn things back over to Fausto.